Hello traders, it's Samurai Trader here. I'd like to welcome you to this members only training session, how we day trade using three time frames. Now I just want to turn the camera on for a moment and say hi. Yes, I really do exist, so it's good to well, hopefully it's good for you to see me. So this recording will be one of the most important videos of mine that you ever watch. It's so important that you understand the power of using multiple time frames, and once you understand the theory behind it and how it all comes together with fractals and trading, all of a sudden, well, hopefully you have a big aha experience. Now also, what is very important, if you find the three time frames a little overwhelming to begin with, that is, if you're a new trader looking at one chart may be a bit daunting at first, two okay, and three mind-blowing, start with two, okay, or maybe spend a little time on one, introduce the second one as soon as possible. I can give you everything except one thing, and that is screen time. So it's very important that you gain a screen time. But what you're going to discover in this video is just how important using higher time frames really is. And I suppose it's really only the last few years that it's really come home to me, the importance of these. And in many ways I almost look upon this as a great secret, because hardly anyone, yes, I hear of trading using anchor charts, but hardly anyone knows why they're so effective. So I'm going to show you that as we get underway. So let me turn the camera off. Now the three time frames, the EC, which I call the entry chart, is what we do most of our trading on. We've got then the anchor chart 1 and anchor chart 2. Now what you'll notice here is that I know the slides are perfectly within the screen, because I want to get as much of the trading screen as possible when we go to the actual live charts. Now just in reference to abbreviations, if you go to my Google Drive, a couple of important things. First of all, if you go to the folder there called scalping, you will find a document there called trading terms and abbreviations, or a lot of the terms, if you're a newer member for an example, a lot of the terms I use you may not be familiar with. You'll find them in this little cheat sheet there. Also, in reference to the time frames that we're going to be referring to, on my Google Drive there is a little folder there called chart time frames, and within that there is a video there on where I discuss time frames that I recommend that you consider. Now in the end, the time frames got to be tradable. Okay, so you want to pick a time frame that is tradable, because we're experiencing some incredibly fast markets at the moment with the coronavirus. However, that will settle down, and we've even seen really the last week or so the market slowed right down. But the greatest challenge that we have right now is the margin requirements that brokers have, so that will ease back in time. The Fibonacci numbers that I use, and where I always, when I'm using fib numbers, say for a tick, volume, or a time-based chart, I use I jump up a period of 3. So if I'm using say a 55 tick during the Globex session, I will then want to jump up here to a 144 will be my anchor chart 1, and a 377 will be my anchor chart 2. But all of that is pretty much explained in that video. So let's get back to the charts. All right, so first of all, I do need to put up the disclaimer. There is a risk in trading. Please pause the video and read the disclaimer. If I don't tell you that, the CFTC and NFA will be after me. All right, and just a very quick advertisement. Look, what I'm about to show you, traders, we go through in great detail twice a week. Every Tuesday, Wednesday night, 6 p.m. to 8 p.m. Eastern Standard Time. I've got around 200 members that I coach every month. I've been going now for close to it's actually 2 years this month. I've been running these coaching sessions. So it's only, you can join as a special we've got going. If you look at the website, it says $997, but as a member for $97 a month you can join my coaching. Join for 1 month. It auto renews. You can just give me 3 days notice before the end of the month if you don't want to continue. But as I mentioned, we've got dozens of members. Many are professional traders that have been attending for 2 years now. Or you can take advantage of the annual membership comes down, it's only $49.75 a month. There are dozens of additional handouts, PowerPoints. It's huge, but I'm not going to go into it now. But you can join, and in the email which you would have received this link, or if you want to email me directly, trader@imadaytrader.com, if you wish to take advantage of one of these memberships. Okay, that's the end of the ad. Let's get on with this. So what we're talking about here is trading a multiple time frame momentum strategy. That is, we're looking for the market to be moving, and we identify high probability trade ups setups using anchor charts. And the way I like to look at it, as traders, we're like surfers waiting for the perfect wave. And if ever you watch the waves, you'll see that there's small waves then followed by large waves, etc. That's just the way the currents work. So we're looking for these great waves, and we find those waves by looking at our higher time frames and trading in the direction of our higher time frames. Now this is where I really want to get into the theory and why this is so powerful, because when you start to trade entering on an entry chart on your lowest time frame, but you're trading our EMA bounces on your higher time frames, these are the time frames that will give you the home runs, the big moves. You see, traders, the markets are what we call fractal in nature. That is, and if we look at just a little definition here, fractals are objects in which the same patterns occur again and again at different scales and sizes. In a perfect we can see here this particular fractal here, it goes basically to infinity deep. It just keeps, these patterns keep repeating. This pattern here, it just keeps going down and down and down, and we can see here that each one of these is a pattern within a pattern within a pattern. Now you may be thinking, now Ray, have you lost it? The point here is, traders, when you see a 34B on an entry chart, the same pattern appears on an anchor chart. The same pattern will appear on the higher time frame. Every time frame will have a 34B at one stage or another. Now if you trade 34Bs correctly, you should be getting a good 75 to 84% win-loss ratio. It kicks butt. The same win-loss ratio will work on all time frames, except when you trade a higher time frame, say a 34B on the anchor chart 1, that is, it sets up as a 34B, it will move a lot further. Meaning if you enter that trade on an entry chart, meaning you get in earlier, it will go a lot further. So you can really go for those home runs, go for those larger targets using a smaller stop, larger targets. And I'm going to show you these on some charts today. So in principle, and what I've got here is just really the dark blue line here represents an anchor chart 1, and our red line here it represents our entry chart. So I'm looking for pullbacks and retracements, EMA bounces back in the direction of the higher time frame. So let's go to the charts and have a look at these. So let me just pull this up for you, and here we go. So what I'm going to do is I'm going to show you with all three time, and we'll just see how we go for time, because I'll show you with all three time frames here and explain exactly what I'm looking for and what you will start to look for. Now trading, successful trading, besides having the discipline and the patience and following the basics of our money management rules, it really is a pattern solving exercise. Virtually everything I show you, or I'm about to show you, are patterns that we see in the market each and every single day. So if we look at this here, so starting from down here, what have we got? So let's just start from the left here, why don't we? So number one, the sign, of course, is my 89. Above the 89 I've got the 34. Above that I've got a 21 EMA. So if we look at that, I've got an 89, a 34, a 21. Here is my 200, my longest term, and of course my blue line is the 8. Now I'm using a Renko chart here. Now you could be using a tick chart. It really comes down to what preferences you prefer, but I'm going to come back to that because I want to explain entries to you in a moment, which are very important. Now technically, when we look at this is actually one of these danger zones. When we start to see our EMAs coming together, we know that basically we are heading for a breakout, but it just depends in which direction. Now we can see here we've had a big sell-off down here. Okay, prices start to come up. We've got a 34B. We go into this sideways range. We look at our anchor charts, and this is what you would be looking at the time, by the way. That's exactly what you'd be looking at. Now what we can see here is we had divergence down here, so we were coming off, and here we were coming off for 2D, which stands for two divergences. So we travel along, and even if you didn't take any of these trades, you might have taken this one here. See this one here? What is this? This is a T19. You've got a higher high on price and a lower high on your MACD. Okay, a nice little successful trade there. And I perhaps should just point out, this is the micro ES. Okay, and this is a 1-point Renko candles, meaning that each candle is worth 4 ticks, which is on the micro it's worth $5. On the big contract it would be worth $50. Now every one of these steps that you see here is worth $2.50. So 4 steps. So say if I entered this one just here, say on the close of this one, 1 2 3 4, there's $10. There's about $20 in that move. And if you've seen some of my more recent videos just on setting targets, $50 a day on the micros makes you a very wealthy person within a year. So there is, and I will point this out perhaps, and for those that may have missed it, I actually prepared only yesterday a video here on trading micro E-mini futures. Was it yesterday? It was a few days ago, sorry. So here, that's right, on trading small accounts. I'm just thinking which folder. So there's some information there on the micros, and where is this? It's called trading. Gee, I do that many things, traders. I get lost here. Here we are, day trading a small account. Go and to that folder, day trading a small account, and you will see there the steps I'm talking about. So for an example, if you're trading a 4-point Renko, which is really very tradable even right now in conditions, it means that you've got a risk of $17.50 if you're using a buy stop. All of this is explained in a video that's here. So we really want to be achieving around 8 steps, which will be $20. That is to cover our risk and to cover $1.50 in commissions on the micros. So once again, day trading a small account, and there is this video here which will explain it all. Okay, so go and watch that. So we get through this area. Once we get through this chop, terribly, and by the way, this is the open of the market, so you wouldn't have even been trading here. So this is 9:30, this is 8:30 central, which is 9:30 the open of the ES market. So you could even forget that, because we don't want to trade for the first 10 minutes at least. Now we have this pullback here. We exceed the 200, and this is what we call a 200 EMA overshoot. Now if you were looking at your anchor chart, this is what you would see. You would see it coming up here like that. Whoops, I didn't want to do that. I wanted to be over here further, and you would see that we've got a bounce on the 89. So on our highest time frame, what we actually have there, traders, is an 89B on our anchor chart 1. So we've got the entry chart is this one here. This is my anchor chart 1, and this is my anchor chart 2. So for establishing the time frames, I've got a 1 point, a 2, and a 4. So I've got a 4 tick is my entry, 8 tick is my anchor chart 1, and 16 tick is my anchor chart 2. Now normally speaking, we'd look at this trade here and we would ignore this. I would have actually taken this one, and unfortunately I get stopped on it. we can see here that here it turned around and kept going. If you look at your anchor chart, you can see though we actually had divergence. Now I get stopped on that trade, it comes up, and now I have a secondary entry. See my divergence, and I've got divergence. And that's one thing you can do if you want to be a little more conservative, is that would normally, traders, look like a traditional counter trend trade. Okay, you've gone past the 200, I've got a higher high and a lower high, and thank you very much, there's my good $20-30 move on the micro. And with that, just make that 10 times. So what you've got there is a $200 or $300 move if you were trading the big contract. Now let's just look at the anchor chart. So on the anchor chart one, you can see there, traders, that there's that follow through. Okay, now a little further along, just there, we also had a T10. Now remember, traders, a T10 is when your long-term stochastic has been overbought, it's heading down, you then have either a double top or a lower high, and your stochastic short-term comes up and hooks over. So you've then got a T10 as well. Now price comes down, and now we get the super scalper plots again. Now please remember, whenever we have a counter trend trade, I always need to have 3 lower closes to confirm the trade. Okay, or if ever I've got a really deep pullback, and that coincides and actually is a super scalper. So let me just explain the super scalper again in detail. The white paint bar you can see here does not plot until the 3rd candle, and in the case of my coding for TradeStation and InterTrader, until the 3rd candle here ticked above the 2nd. As soon as that 3rd candle ticks above the 2nd, the white paint bar appears. If you're using the MT4 and I think even the TTM scalper for Think or Swim, it would not plot until I think the close of the 3rd candle. Now when we have a super scalper plot, I do not want to enter this trade until the 3rd candle closes. Why? Because what can actually happen is it can go up 2 candles and the 3rd candle plots, but it can still reverse. I want to see momentum underway. When you're trading Renko, there are really a couple of really good entries. You can either use the rule of 1, which I'll show you on another chart, or we can use the super scalper. So let's just say with this super scalper here, the 2nd candle, so as soon as you see your 1st candle, reversal candle, get ready, 2nd one, get set, 3rd candle closes, go. My stop would go 1 tick above there, my stop here would go 1 tick below. Now where I mentioned earlier I had a $17.50 stop on this, what I like to use here is use a buy stop. By putting in a buy stop 1 tick above the high of the 3rd candle, okay, it means I'm getting swept into the trade. You can use market orders, of course, and that's one advantage of the micros. Yes, you might get 1 or 2 ticks slippage, but you can handle that. Okay, but I do want to have my stop 1 tick below. Let me just give it one more example here of the super scalper here and I should point out, to have the super scalper plot, you've got to have a minimum of a 3 candle retracement, okay, minimum, okay, and then a trend continuation. So there you had 1 2 3 4 5. Okay, we then had 1 up candle, 1 long candle, okay, the 2nd one, and as soon as that 3rd candle pops its head above the 2nd, the super scalper plots, but you want to see it close. My stop would go 1 tick. Now when it comes to tick charts, which is what I want to show you, if you wait for the 3rd candle to close, sometimes you can see it's a fair way down. Okay, so here's my 1st candle, 1st close, the 2nd one, and in this particular case the super scalper would not have plotted until this candle, which is actually the 4th candle, and my stop would go ideally 1 tick above the high. I also like to see on tick charts. I like to see a close below the 8 EMA. But what do you then do if you've got really big candles? Okay, so let's just look at this over here. In fact, it would have plotted just here. So see this white candle here? Here's my second. It took that one out, and see the tail of that. So it would have actually plotted just there. I would not have been happy that is an entry there. I would have put a sell stop in one tick below, or to use a market order as soon as I start to reverse. Why? Because I want to see the candles that I enter a trade on close in the direction of my trade. Okay, I want to see them close in a direction of the trade. But let's get back to the main concept here of the higher time frames. Now look over at your anchor chart. What's the direction of the gold? Okay, our 34 EMA, it's on the way up. Okay, if we look over here, we've had a big overshoot here, and we're now coming up. My super scalper plots here, and as soon as that plots, I want to be in. I want to go long here. It still is a higher risk area, but remember, you've got to go into the lion's den to steal the cubs. We think in laws of probabilities, in probabilities of 20 with these. Is it look, every individual trade is random, anything can happen, but we know that over 20 we're going to get a good 75-80% of our trades are going to work out. So here I've got slightly slight overshoot there. We are sideways, slightly higher risk area, and I buy here. What I can see is the 34 on the higher time frame is rising. Now we then rally up here, so we come up, and here I now get my super scalper plots again, and I look over, and what do I see on my anchor chart? See how I've got divergence here. So basically on the higher time frame, I've got a T19. I've got a standard divergence trade. See that there to there, and there to there. It's almost a double top. Now I also look over at the anchor chart, and I'll pull this over so you can see it a little better. But see that right there? You've also got, at the time, you've got a 34B on your highest time frame. Now that is what you'd be looking at the time. You can see the 34 is heading down, and what I'm actually showing you is a really difficult area to start with. So there's a lot of chop here at the moment. So we can see the 34 coming down. I've got a 34B on the higher time frame. I've got divergence on my anchor chart 1 in the direction of the trend, and I look over here and I don't have any actual divergence here, but I have to take this because I've got divergence and a 34B. I then take this. My entry will be on the close of a third candle, or using a sell stop one tick below, and my stop goes one tick above. That gives me a 14 tick stop. Okay, and away we go. Now if you're trading, say, a standard ES contract, or you might be trading oil, forex, or stocks, it doesn't matter what market you're trading. You've just got to get the time right. So of course your tick value and the size stop, it's just going to depend on the market that you trade. So we'll just keep using this one for now for the example. Now price now pulls right back. Now what I'm now waiting for here, okay, is a retracement, and we can see here that on my anchor chart we're heading down. Here this is basically what we call a bet the farm trade, because we've got a bounce there. That is divergence at the 89. So I'm now going to look for another short trade, and there it is right there, back in the direction of the trend. Okay, there it is right there. Okay, and we can see there we end up getting stopped on that trade. Okay, but I'm being mechanical here. We were coming down. Okay, we now come back down here, traders, and I now get all of my EMAs are above here. Now sorry, I'm just going to pull this back because I'm sort of losing because I'm trying to read the higher time frames. Now if we look at this here, we can still see that we're heading up, and just what I saw then, I may have taken it, may or may not have, but let's assume I did take it and I got stopped on that trade. Where would I get stopped? It come down here, bounced up, it only went down only went down 3, I call them steps, which is only $7.50. So I would have still been in that trade, and then it reversed, and then you had another 2B. Okay, why is this a 2B? See how the 8 is above the 34? Look at this, we're heading up, the 8 is above. I want you to remember the term, the stacking or the fanning of the EMAs. What's our preferred stacking or fanning? It's where we've got the 200 EMA, the 89's above, the 34's above the 89, the 21. This is perfect trading when we've got that. Okay, that's a fanning of the EMAs or a stacking of the EMAs. Now as we now rise, okay, and I'm trying not to scroll across because it gives too much away. Now here it is right there. Now see this turn here right there. We look at this and we think, okay, we do have a T19. I've got some divergence here, and actually look at this divergence here. We look over at our anchor chart, I've got a 200B again. Okay, sorry, not again. I've got a 200B bounce on my anchor chart 1, but I've got a 34B again on the highest time frame. Now when I get 3 lower closes, all right, or we use a buy stop here, I'm trading this bounce. Now what you can do to be conservative here, traders, you can wait until, on deep pullbacks, wait until the first candle closes on your anchor chart 1, only on the anchor chart 1. So if ever you're not sure and you want some additional confirmation, wait for that candle to close. Okay, and we're short, thank you very much. Now we come on down, and let me just pull this over here, and we then get another bounce again. Now quite frankly, looking at that there, okay, let's see here, so I'm just trying to read. Look, I don't know whether I would have taken this just with this choppiness that we've got here right now, but it works out to be maybe I would have, maybe I wouldn't have, but I'm telling you what I would have taken and what I wouldn't have taken. Okay, trying to be as accurate as possible. So now we're waiting for, bang, I come up and look at that there, I come back up to the 200 again. Now I've got no divergence here, but I do have divergence here, but I've got a 200 bounce again on my highest time frame. I get my 3 lower closes, it must close, and I short the market again. Okay, we then come back down and we now get a bounce here on the 200. Now we look over here, see how the 34 is now come up and above the 89. I have to now take this as a long trade. I have to take that as a long. Okay, why? Because the 34 has crossed above the 89. More and more indications are pointing towards long trades. This one, I wasn't sure if I'd take that one. Okay, but now I've got to take this one because look at the stacking of the EMAs. The 89 is above, the 34 is above the 21. We're now heading up, and now on the anchor chart we can see their trade is that the 34 is also crossed above, okay, the 89. So I'm just going to scroll this across. Okay, so now we have now a breakout, we're definitely long. So now I've got to wait for a retracement on my entry chart here to take another trade, and just there, okay, just there, what have I got? This is a 34B. Forget the white paint bar for a moment. So you've actually got 2 entry choices here. You can enter that just on the first candle, and we call that a rule of 1, or and with a short-term stochastic hook. Now every time you get a hook like this, we call them short-term stochastic hooks. When the the long-term stochastic is overbought, it becomes a T2, okay, a slingshot trade. Or if it's oversold and we get the hook, it's a slingshot. But really it's just as good as a slingshot, so you can enter that using a rule of one on the first candle. Okay, and we've gone punched right through the pivot there. So now what am I waiting for? I'm waiting for a decent pullback. Now if you want to trade just the best of the best trades, the best of the best, you want to trade only the 2Bs followed by the 34Bs. Now for 2B is where you get a pullback and we tag the EMAs on your entry chart and on your anchor chart, or on all three. That's what we call a 2 or a 3B. There is a folder on my Google Drive where you'll see a video on that. Now you may choose to trade say two markets, the micro ES and maybe the NQ, only trading 2Bs. Why? If you'd have taken that trade, it followed it. Look at the distance it goes. Yes, it wriggles around, but you'll do really well out of those. Now remember, if you get 10 steps, that's $25 on the micros, or 250 on the big contract. So here right now we've gone well above here, and you can see there, traders, that I've got no real divergence here, so I don't have. And now actually I do actually get a divergence trade just here, but I've got no divergence, and that's on the entry. I've got no divergence on the higher time frames. Okay, so this is a standard T19, which means it's a weaker trade. But just there, what have we got? We've got a 34B again. Be very wary in taking 34Bs when you see divergence on your higher time frames. Okay, so then we rally up, and when you go up like this, what you're always looking at is, do I have divergence setting up on the anchor charts? Now I've now come up, I've shot past the one of the floor pivots, and I've now hit a midline pivot. I'm just going to try to find that same spot there, which will be just there. Okay, because what I'm looking for is divergence. Now here I've now got three lower closes, and a little tip I just want to give you here, traders, is that if ever you consider taking a counter trend trade, and please, new traders, don't take any CT trades until you're profitable trading with the trend. But a little tip here, from your entry, which is the close of a third candle, what's the distance from my entry to the 34 EMA? The further away you are, the better. And look at that there, there's a good 3 points away. That is a great counter trend trade, except I still don't have any divergence on my anchor charts. Okay, so you can see it there. It'd be really nice, and let me just scroll this along, just see whether I actually do get any yet. No, and I still don't have it there. So this is not a high quality divergence trade, and you can actually see here it comes down and then it pops back up again. Remember earlier I said that the patterns are fractal in nature, so when you look at divergence on a higher time frame, and which is going to be the best, divergence on a higher time frame or divergence on a lower time frame? The divergence on the higher time frame. Why? Because it's going to be a much stronger move. Now we now look at this here. We're now rallying up, and look at this down here. See, I'm getting some real divergence now setting up. Okay, and we hit the floor pivot. See the yellow mark here? So what I'm looking for there, and there it is right there. Now what we want to do is we want to rally up, and see down here I'm now getting divergence. Now I'm interested in taking this divergence trade. And let me just pull this back. Whoops. Now this is what we call, whoops, damn it, it's not what I wanted to. This is a problem when I'm doing it scrolling like this. Okay, so what we now have is a 2D. This is a 2D divergence, one divergence and two divergences, big picture and small picture. When you've got a 2D divergence, like over here we didn't have any, very poor divergence, and it went nowhere. Now we've got real divergence. You target the 89 EMA. Why the 89? The 89 EMA is represented by the 34 EMA on your anchor chart 1. When you've got a 2D trade, a high percentage of the time it's going to come down and hit the 89 EMA on your entry chart. Now it may stair step down, so it can wriggle around. Usually we'll get a bounce at the 34, but if ever I've got a 2D, I never want to take a 34B on the entry chart, because it might be profit taking only to see it collapse. So when you've got a 2D, and a 2D can be also when you've got no divergence on your entry chart, but you've got divergence on both anchor charts, you target the 89 EMA. Okay, and well, there you go. See how you get that profit taking at the 34? We see this day in, day out, profit taking at the 89 again. Okay, so we want to target these. Are where you get your home runs. Now what I'm going to do, traders, is we'll just have a look at another market, and we can see here then we then come down, we then get what we call a bet the farm there. So see this trade here. Okay, you've got a little lower low. You look over at your anchor chart, what have you got there? See how on the anchor chart, now we're getting some really good examples, you've got a bit of a 34B there on your anchor chart. See the divergence I've got there? We want to be trading in the direction of the trend. What's the direction of a trend? I'm still in an uptrend. Okay, now having 3 reasons for taking a trade is much better than 1. Okay, it puts the probabilities more into our favor. So I would wait for the super scalper to plot. You can enter that on a hook, but also you might have entered it here on the short-term stochastic hook. So that is why I really like to wait for the super scalper. Now I enter on the close of a third, my stop goes 1 tick below. We can see I wasn't stopped out. Always I like to see it 1 stop below, and away we go. Now we went up to the 34, we come and then we come back down. We then formed, if you hadn't taken profits there, if you were still in it, 1 2 3 4. Look, I would have got out of that at a break even, but I have a re-entry just here. Okay, we've got a re-entry, and that is what we call a bet the farm. A bet the farm is where you've got a double bottom or a double top at either the 89 or the 200 with divergence. So there's my divergence, and it's even a 2D. See my divergence down here, and we go long and away we go. Thank you very much. Let's have a look at the bond. Okay, so we will look at another market. So let's go and have a look at the bond. Now we've got many traders that trade the bond. A lot of European, a lot of our members are based in Europe, so let's just consider that. So why don't we just pull this back here, and I'll just do a little bit of cheating here by showing you some marked up trades. Then I'll actually just expand it, and I'll do some right hand. I'll get requests for doing this all the time, where I go from the right hand side where we can't see the anchor, and I'll tell you what I'm looking for a trade. So let's just start with this. So the bond opens at 8:50. It closes at 4 p.m. Eastern, then it reopens at 8:15 Eastern Standard. Now the bond is worth $10, or sorry, 10 euros, which as of today, I'm shooting this on the 12th of May. It is at a, I think the trade, I took some trades today, and it worked out to be $10.08 USD per tick. So 10 euros is worth USD, it's worth $10.80 at the moment. So you'll usually get some half decent volume for trading during what we call the Globex hours. And the reason I like the bond also is the day trading margin, or sorry, not the day trading, but the overnight margin. It's only 4,000 euros, so it's 4,400, 4,500 USD. You can be trading the bond. Now what I've got here is a 2 tick Renko and I should have pointed out also, it trends beautifully. It's a beautiful market. So this is a 2-tick, meaning each one of these is 20 euros, and each step is 1 tick, 1 point. Okay, so this is actually, if you want to go back and look at this, this was the just looking at the date for you, this is the 11th of the 5th, just there. All right, so you can go back and look at that to model this exactly. The market opens, not a whole lot happens. I'm just looking down here, comes down there, market opens at as I said 15, comes down, rallies up, nothing's really happening there until I get this 34B. Now with the bond, there are two ways you can enter the market. You can enter using what I call a rule of one entry, which are using the short-term stochastic hook and or the rule of one, or the super scalper. If ever you're not sure on a trade, wait for the super scalper. It will get you in later. Now if you're trading a 2-tick Renko, this is what it means. If you wait for the super scalper to plot and you put in a sell stop order in, and this is so slow at this time, and this is one of the things I love about it, it's so slow, you got plenty of time to put your stop in, you would end up with an 8-tick stop. Okay, so if I got in here, I go 1 2 3, it works out to be 8 ticks. If I put my stop loss 1 tick above and a sell stop, it would be 8 ticks. If I enter using a rule of one, that is on the close of the first candle, the first reversal candle, I would have a 6-tick stop. So you can get in there as a 34B using a rule of one, or waiting for the super scalper. Now where's our magnets? And we know that the floor pivot and the bond is beautiful on the pivots. It comes down for a pivot bounce. I now end up with a 2D. Look over at your anchor chart one. Whoops, I'm just going to look at my, and actually it is a 3D. Why is this a 3D? 3 divergences. See that divergence here, and look at I've got divergence there to there, and I've got divergence here to here. This is a 3D pivot bounce. There I've got 4 screaming reasons to take this trade, and that little black dot is my T20. That is where the 8 crosses through the 34, which pretty much represents a 50 CCI zero line crossover. You may remember with a 50 CCI zero line, many traders use a 50 CCI, and I used to use it years ago as a trend following indicator or a trend directional indicator. If I'm above the zero line, I'm looking for long trades only, generally, unless it's a counter trend move. If I'm below the zero line, I'm looking for shorts. When the 8 crosses through the 34 here, it virtually is within 1 or 2 bricks of being a 50 CCI zero line crossover. All right, and T20s, as we know, you can trade on their own anyway. So lovely trade. Now if you're going to trail, this is where you might use an ATR or a parabolic. Okay, there's a number of things there. I won't get into trailing here, we'll be here forever, but you can see here I could have trailed this all the way up to the top here. Now that's what, a good 20-30, that's a good 200-300 euros in that move. But here's where it starts to get interesting. This of course is our 200 EMA, and this is where now I've got a 200 EMA overshoot. We look over at our anchor chart, what's happening on my anchor charts. On my anchor chart 1, I've got a 200B. On my anchor chart 2, I've got multiple EMA bounces there, and here I've only got it set up slight divergence, so it would only make it what we call a T19. A T19 is where you only have divergence on your entry chart. A T19 is also your weakest divergence, when you've only got divergence on your lowest time frame. So there is a definite trade you want to take, because what you're really doing is trading a 2B on the higher time frames. Okay, so you're trading your 2B. Thank you very much. Now that's let's just say you got in using sell stop 1 2 3 4 5 6. Now you come down and touch 7 ticks. Now I'm really after 8 in this case, because my risk on the because I would want to see the super scalper or 3 lower closes there. You could have entered on your first reversal, but hey, because it's a deep pullback, I want to have a little bit of insurance. Now if I've got an 8 tick stop, ideally I want to be going for an 8 tick target, but as soon as I get down to 6-7 ticks, there's no way known I'm going to give all of that back, right? So that's where we want to really take up and lock in at least 4 or 5 ticks profit. Now just here, look at my long-term stochastic coming down. You had a T10 just there, and you've got another T10 here. Remember, a T10 is where your long-term stochastic is heading down and your short-term hooks over, and I'm after once again a minimum of 8 ticks. Okay, down we come. Thank you very much. Now this is where, as we come down with these moves, traders, you want to be trailing and see that there, that tail. You can trade the first 1 to 2 maximum. Really, I like to trade maybe the first tail, because at that time that would have looked like a reversal candle, and that's why you really want to see a close. So if one of your exit rules might be the first reversal candle that closes, because you can see there that look like, and you can actually add to your position. Now what I'm looking for here is, and there it is right there, the first reversal candle would be your exit. That would have been a green candle, because the white, remember, doesn't plot until, okay, that doesn't plot until a tick above the second candle. So there. Now what have I got? Well, at this stage, traders, I'm looking at this here. I don't have any real trade there at this stage. Okay, I don't have any reason for taking this. So what I am waiting for now is a retracement back. Now we can see up here, and I haven't scrolled along again yet, but definitely we are in a downtrend. Look at that. All right, the 89 is under the 200, the 34 at this stage is still under. Look at this, the 89's crossed under on the anchor chart. We're in a downtrend, so therefore I want to see price action rally up to probably the pivot there, maybe the 34, and reverse for a trend continuation. Also look at my long-term stochastic. Notice how long-term stochastic is basically oversold. Note the short-term kicking up there. What that is going to potentially set up, traders, is a slingshot trade to the short side. So what I'm going to wait for is my first reversal candle back in the direction of the trend. Okay, so here we go, we pull back. Now you're always getting ready. If you had have taken this one, look, I wouldn't have taken that. And actually, just quickly looking at this, what you actually had there was actually an ABC. All right, you actually had a fib retracement there. Let me just show you this. Let's see here. So if we look at, you take it from there to there, and you can see there, traders, you had a 61 bit. It's look bit over 61% retracement there. So you might have taken that as an ABC. So I should have perhaps pointed that out. But we're now heading back here. So I'm sorry, I can just see my daughter walking past my office window, and I'm just letting you know I'm recording. So here I'm waiting for a reversal here sometime. So we come up, okay, we're coming up, there's my T20, bang, there it is there. Now note here how I had my hook here. I've got two options here right now. I could enter that as a rule of one. The first candle that closes, even though it hooked back here, I would still be happy to take that as a rule of one on the bund. It works really well on the bund. Okay, or if you want insurance, you can wait for the super scalper to plot, which means it plotted now, and you could enter on the close of this candle. You actually see I've got it marked up, so you've got two options there. So let's now talk targets. Oh, and by the way, I enter as a sell stop if I entered there either below the first candle or the super scalper, and my stop would be 1 tick. The advantage once again of a rule of 1, I've got a 6 tick stop compared to an 8 tick stop. When we enter a trade, we're always looking at where is a good potential area for a target. Where can we target? In this particular case, my last major swing low was here, so it'd be nice to come and take out that area, assuming we keep falling, of course. So I won't scroll over here as yet. Okay, we'll just I will in a moment, but let me just see what fans out here and then we'll scroll over. So what we'll do now, we're going to short here, and my target would be down here. Okay, now it's a fairly big move, but the Bund does this regularly. Okay, so we come down there. Now we've come down and see that there you've now got setting up there also a little 34B. It's hard for you to see there, but the 8 EMA is crossed under as well, but we're still in this little trade here, and bang. So we come down 1 2 3 4 5 6. Once again we touched 7 ticks. Now we'd be out maybe picking up 4 5 6 ticks if you're after large targets, and I can tell you now, and we'll go to the anchor charts in a moment, these are the trades where you want to be going for the much larger targets, because you're going to be having EMA bounces on your highest time frames. I don't want to touch it yet, okay, because I just want to tell you what I'm looking for here on the right hand side. Now I'm pulling back, I'm still heading down. Okay, so what I now want to do is now wait for another reversal back in a direction of the trend. I'm now coming back up here because I'm coming up to the 200. What am I expecting? There it is right there, a bounce at the 200, and see my hook there. So I would enter this using a rule of 1, which gives me a smaller stop loss, or the super scalper. You'd be in now. Once again, I want to take this low out. If I take this low out, where's my next target? Right down here. Okay, I want to come down to the S1. When you come from a floor pivot down to the S1, statistically they say you've got a 93% chance of traveling from here down to here. And remember, your floor pivots are what we call a leading indicator. They're like price magnets, and this is where if you travel down, you can also add to your position. You can add to these, okay, on your pullback. So let's short this. I'm after 8 ticks again. Bang, there's my 8 ticks, and lo and behold, we've taken that little low out. Now, oh damn it, moved along accidentally on there. That's not what I want to do. But see that there, traders, just there and there. So what do we got? I've got a 34B at that point on my anchor chart 2, and I had an 89 on my anchor chart 1, which is that point there. These are the trades which will give you the home runs, a much larger move. So if you want to go for 10 20 tick moves, these are the trades that will give it. Now we've come down here, and one thing I should have pointed, I'll be looking at what a lower low. I'll be looking for divergence. That's too wide for me on the entry chart. Okay, so I'm not happy with that as a divergence trade. So now it rallies back up, and now we rally up, and now we've got a 2B again, and the 2B was actually right there. Now there's two choices you've got here. You can enter this as a 2B there using that's a slingshot on your first candle, and you can see here it's a 34B right there. Remember, when you've got a 34B on your anchor chart 1, it's a home run type trade, generally speaking, because a 34B will behave exactly the same as a 34B on a smaller time frame. A good 75-80% are winners. Now remember, we've got just down below, we've got our S1, which is our magnet. All right, now what you may choose to do, if you're a new trader or you want to be conservative, you can wait for your super scalper to plot. and you can see there your stop would have been one tick above, so it come down and tested you, but then it rallied back up again and you were safe because of your stop loss one tick above. So let's just say we waited for the super scalper, so we're in at 1 2 3 4 5 6 7 8 9 10 11 12 13 14. Now that was 14 ticks, or 140 euros, about 160, was that, is that right, 150 160 US dollars to that pivot line just there. Now when we come down to that, okay, we've now got, and we actually punched, gee whiz, we punched well and truly through that, and this is where the power of trailing comes into it. Okay, you can trail, and by the way, I'm terrible at trailing. All right, I'm a scalper through and through. You could be trailing using the ATR here, a parabolic, or waiting for your first reversal candle. Now, so I've got this little bounce, I've got no divergence here, no divergence here, and no divergence here. So when we look at this trade, there's only one type of trade potentially you've got here, and it's what we call a T3. A T3 is where you get a major move but no divergence. Okay, and if you're game enough to take that, depending on how quick that was, and you'd target the 34 EMA, but I'm just going to give this a miss because I have no divergence, right? And see how you got angulation, right? So you got price moving right away. You then get a little bounce there. It's right at the pivot. It's also a slingshot, and you would enter that, if you're going to take that trade, is you'd enter it using the rule of one. And because see here, you've got the rule of one, and you've got the short-term stochastic hook, which is also, okay, it's also a slingshot trade. The challenging part is it's very close to that point just there. So there, if you took it as a rule of one, all right, there it went down. That's 1 2 3 4. It bounced at 4. Now it forms a little double bottom. Now we've got divergence. As it's come down here now, I've now formed a double bottom. I look over, just going to scroll that along here. I look over at my anchor chart, and what have I got over here, traders? I've got slight divergence there, not screen. Oh, damn it, sorry how it moves, that's a little bugger. Sorry about that. You can see there I had divergence, double bottom. It's what we call a T7. Now just there are two targets, and just there, when you've got divergence on your anchor, and that wasn't great divergence, you target the 89, as you know. Otherwise you'd be targeting somewhat at the 34. But when you've got a double bottom, you'll notice the 34 EMA keeps coming straight down, which gives you what appears to be a smaller target. So what was good about this one is you're still very close to this pivot, but if you're a new trader, you're not going to take this trade. I really wouldn't recommend it. Now let's get back to this. We come on down, okay, we come down, and I now get my 89 bounce. Now you look over at your anchor chart, and what have I got there? It's virtually a 34B again. See that there? Look at the trend, the downtrend. I have up to this stage virtually no divergence on my higher time frame, really poor divergence, just a little hook. Why is that important? If I've only got divergence on my entry chart and virtually none on my higher time frames, that increases the probability that the market's going to continue to fall until I get strong divergence on my anchor charts. So we will short that. We're shorting that as a 2B. Once again, all of these were 2Bs. Why is it a 2B? We're bouncing on the 89, you're bouncing on the 2134 just there. What do we want to take out? We want to take this low out down here. So we come down, okay, beautiful, we take that out. Now what have we got here? Right here we've now got a pivot bounce. Now let me just scroll this along and let's have a look. So there's my bounce. Now I've got a 2B. Why? Sorry, a 2D. Sorry, 2B, 2D. Why is this a 2D? Divergence just there. Let me see if I get divergent. All right, I've got bigger picture divergence just here. I think I'm trying not to get the yep. I didn't want to move that along. Okay, this is one of the problems in doing it this way, but we can see there that we've got divergence. We had just make sure we got the right spot there. Yep. Okay, divergence, slight divergence there, but the big one was divergence there and divergence here. Where are we going to target? The 89 as a minimum. Then away we go again. Now we cracked the 89 just here, as we can see. Where is our next bounce point? Remember, as traders, we're really thinking a number of things. First of all, where's my entry, where's my stop go, and where is my target? One of two things, or really one of three things, will usually happen at this point. We'll get a reversal at the 89, at the pivot, or up here at the 200 EMA, because that's our next major magnet. Look at my long-term stochastic coming up, and what you've also got down there, and right there you've actually got, traders, is a T10 again. A T10 is also known as a money on the floor or a ka-ching trade, and that is where the long-term stochastic was oversold or overbought. Short-term comes down, hooks up, and the long-term's on the way up. Okay, we're now heading up, thank you very much. And now I look at this. Now let me just bring this along here. Now note here, traders, I've got no divergence here. I've got no divergence on my anchor chart. I've got no divergence. I'm going to take this as a rule of one trade. Now a rule of one is very similar to you'll see the PowerPoint there, the T25 setup. Now the T25 setup is the old floor trader strategy, the 2 to 5 candle pullback. However, you can use it or enter on a 1 candle pullback if you just got a 1 candle in a strong market. Right, it's also nice if you want to see a stochastic hook, short-term stochastic hook. Now if you wait for the hook, that didn't happen until the second candle, means you're going to have a larger stop loss there. Okay, now note here we've got no divergence, because normally at this level we'd be getting worried, wouldn't we, that we're going to have a 200B, a bounce just here, but we've got no divergence. All right, so we're going to take this long, going to ride it up. We're after our 8 ticks and we romp that in, or do we 1 2 3 4 5 6 7, we touched 8. Okay, now that doesn't mean you were filled at 8, so you would have gone and whacked in and got at least your 6 ticks out of that. Now I'm starting to get some divergence. Now because in a way now I've got a 200 EMA overshoot, I want to see the super scalper plot, which it hasn't done. See there, well actually let me say this. Now I'm going back on history from last night. This was I was in bed when this was I in bed then? I think I was probably sleeping, so I rebooted my computer. That actually would have shown a super scalper. So this is actually a really good example to talk to you about this. This is why, let's just see how far it goes. See this floor pivot up here, there's sort of a close to a target to have, but see how this is reversed. See how we've had more than 3 candles going up. So yep, 2 candles come down, and see the tail there, that would have had the white candle plot. So if you don't have the super scalper, you've got nothing to worry about. But if you did have a super scalper and you left your computer on, you would see that the super scalper plotted. But note, I didn't have 3 lower closes. It reversed, so I would have been stopped on that trade. Now we now come up, and now I've got my 3 lower closes, and let's analyze this. What have I got happening on this potential trade here? This is now, if we look at the entry chart, just on the entry chart alone, this is what we call a T19. Okay, see how my MACD has fallen off. I've got a higher high on price. It's also a 200 EMA overshoot. Now because I've got an overshoot here, what is it going to be on my anchor chart? This almost certainly will probably be a 200 bounce thereabouts on my anchor chart. Let's have a look. So we come up, just make sure I've got the right spot there, and it's actually an 89, almost a 200 bounce here on the anchor chart. This gets back to what I was talking about, trading these higher time frame moves. Okay, so what we've got there is an entry here. We've got an 89B here on my anchor chart 2. It's actually a 34B. Forget it, looks like it doesn't go very far at this stage there, but see that there started to reverse. I want to take this, right, and I want to go for my 6, 8, 10 ticks, and I'm going to be targeting down here the 89 EMA. Let's just see how far we go. I'll be using a sell stop. I'm in on the close of that tail there, sorry, on the low of that tail, and my stop would be 1 tick above. That's not good so far, but okay, I'm in 1, 2, 3, 4, 5, 6, 7. Now I bounced on the 89. Remember, the 89 traders is a very strong support area. So now what have I got? Well, for a 2B, okay, I do have a short-term stochastic hook there, and I look over here and I'm bouncing here on the 34. I want to see my super scalper. Okay, and now actually I'm getting some support at this area. Let's also talk about this. This in many ways could be like a counter trend trade, because let me just scroll this along, make sure I got the right spot here. Is that, see how I've still got a downtrend? The market's still heading down. So what I'm about to show you is almost a counter trend trade. So if ever I go to take these, here's what I look at. From my trade entry, which will be the close of this third candle, how much distance have I got from there to either the floor pivot or the 200 or a major EMA? So if I take this, I want to make sure that I just don't have just above here a major EMA on a higher time frame. I need room to profit. So I'm going to go enter long here, and if we look at this here, here's my last previous swing high. So that's a really good target to have there, is that high there. Now we rally up to the pivot, okay, and okay, so I'll get a bounce at the pivot. We picked up, there's good 10 ticks here. Remember, we're in a downtrend, so what is that probably going to be on my anchor chart? Let's see. Bang, there it is there, and that is it right there. So if you didn't take that, you had that one, which was that trade there, and now you definitely want to take that. Why do you want to definitely take that trade? Have a close look at the bottom of your chart there, traders. What do you actually see? Look at that there. You've got divergence. So here on your anchor chart 1, I've got a higher high on price, I've got a lower high on my MACD, no divergence here, okay, but I do have it here. Now when we take a T19, normally speaking, and my coaching members know this, where do we always target? For 34. So we're looking at taking a standard T19 on an anchor chart. Here's my 34 EMA down here. The 34 EMA on the entry chart is represented by what? The 89. So what I've got here is a standard divergence trade, and that would normally be my target, which is the 89. So we would be targeting, bang, and we hit the 89. Let's just scroll along. If you're trailing, you're still in it. Okay, so here are two things. You'll get an overshoot. We come down here. We'll just see where we get a turn. Bang, I get a turn right here. Let's just have a look here. Okay, we've come down, and what have I got just here? Look, I'm really not sure, traders, what to do at this point here. Okay, I probably I'm just going to sit this out. I'm really not sure what to do. My ATR is still telling me to stay long. Damn it. Okay, now I've got a lower high. See how my EMAs are going sideways here? This is a higher risk trade. I've got a new lower high. Let's just see what it shows me on my anchor chart. Bang, I'm taking this. This here is virtually once again a 200B on my anchor chart, and that is a 34B on my anchor chart too. Let's short this. We definitely want to take this short. Where's my target? We want to look for that, my previous low. Now just there you've got another re-entry. You could enter there again, or just there, whichever you want to take. You've got a re-entry. Where would my target be, by the way? If you take that, either will bounce here or the floor pivot, and we hit the pivot. Now we hit the pivot, and I must finish this video. We've been going an hour and 10 minutes, much longer than what I wanted, but because I thought it was really important that I show you. Now just here, and there's my reversal there. Okay, so what have I got just here? Look, I've got a T19, but it's not a great T19 at this stage. Okay, so a T19 is where you've got divergence only on your entry chart. Okay, so I've got some divergence here. I don't have any over here. No, none there. So here I'm not really keen. Look, I'm not going to call it as a trade, and bang, it works out mighty fine. Okay, but let's just do perhaps one more. We're now rallying up. Remember, my market is still screaming down. How do I know? Look at the anchor chart. Okay, look at the anchor chart here. Look for your first candle here that starts to reverse. Look at this, traders. We're coming up to the 200, and we've got the floor pivot. We're coming up to the 89. Okay, let's keep scrolling here. All right, we're coming up to the pivot there. Bang. Now, bang, there it is there. So what have we got on the higher time frame? We've got a 200B, and it's going to be an 89B. So we've got a 2B, we've got a 289B here, and we've got a bounce. Now I've got some, and look at this, I've even got a bet the farm here on the higher time frame there. See that there? Now this is where, let me pull this and show you this. This is where you've got to really learn these. See, on the highest time frame I've got a little double top with divergence. The same patterns you have set up here on your entry chart set up on your higher time frame. So what you've got there is a bet the farm on the highest. You're not going to enter until 3 lower closes, or 1 tick below actually, I'd recommend, or you wait for the first candle to close on your anchor chart 1. Where is my target? Back down at the 89 again. Okay, and bang. Okay, we now get, notice here we get support once again at the 34 here, and we would be out. Now let me say, in closing, traders, everything I'm showing you here, they are patterns. At first you can say to yourself, I could never learn this. Traders, this ain't difficult. It's a little bit like, and you hear me say it 100 times, it's a bit like learning how to drive a stick shift. What you got to change is push in the clutch, use the brake, accelerator, look in the mirrors, use the steering wheel, up, yet within 30 days you're picking this up. What is really important in learning how to trade these, that's why it's important we start with 2 setups. You trade only the 34B and the 2B. Right, now the 2B is where we're using multiple time frames to confirm the trend and the bounce. They're super reliable. They're a good, the 2Bs are a good 80 to 85% if you use the 2 time frames. They kick butt and they move further. Remember, the markets are fractal in nature. The same pattern that you see here will be on these smallest time frames as well, the exact same patterns. When you start to see this, it's just amazing, because you look at the higher time frame, I'd say, or ignore a trade. Now I've discovered, if I've got an overshoot, okay, have I got an EMA bounce on a higher time frame? If I have, beauty. All right, I'm bringing the bacon home tonight. Right, that's what we're looking at. So traders, I've covered a lot of information, and of course, if you want to fast track all of this, come and join my coaching. It's only $97 a month. You can cancel anytime after your first month. There's dozens of additional handouts, PowerPoints. If you can't attend live, you can get to watch the recordings. Okay, so traders, thank you very much, and hopefully oh, and by the way, don't get frustrated, get fascinated. You can do this. Thanks, traders.